Hi, welcome back to the channel. If you see me for the first time, my name is Wealth, trader, drummer, and the mentor in the making, turning rhythm into energy and chat into profit, documenting purpose, passion, and self-mastery. Let's go, guys. So, I bring you another new video today, and I believe it will do you so good and improve your trading journey. All right. So, if you ever encountered trading in any way, they will tell you that you have to buy when the market is in an uptrend and sell when it's in a downtrend. But the typical question a beginner trader will always ask is how can I do that? How can I buy when it's going up and how can I sell when it's going down? So that is what I'll be breaking down in this video today, guys. So I will be showing you how to spot the highs and lows and how to enter your entry confirmations and criteria and all that. Basically how to build your approach around trading, around trading a trending market. Okay, so we really want to be trading when the market is trending, not trading when the market is either ranging or consolidating. And that way you not really make any significant profit. All right, so let's go, guys. So let me just enlarge my screen and we'll go. Okay, so first then let me draw a trend, a typical trend, how it will be. Then I'll come back to the chart and do some examples. Okay, so let's say we have an uptrend. All right, let's say we have an uptrend, a market that is going this high. Okay, what happened? All right, so let's say we have something like this. This is typically an uptrend. Okay, let me just draw an extended uptrend that just has multiple legs to the upside. What is happening? I think my network is just misbehaving. Okay, let's do something like this. Okay, this is a typical uptrend. This is clearly an uptrend. All right, the market is purely bullish right now. So this is an uptrend. You want to be buying this asset. Let's say, for example, this is Euro USD chart or GBP USD chart, USD JPY, whichever pair you want to trade, whichever is your favorite, or whichever you spot opportunity like this that is in a clear trend like this. And why is it in a clear trend? Because we're having this is a higher high. Okay, this is a higher low. This is a higher high. This is a higher low. This is a higher high. This is a higher low. So, but here has not pulled back to consider here or confirm here as a higher high. So stop here. This is just a high for now. I don't know if it's coming back to take out this low. So let's leave it at that for now. So now this uptrend has been defined clearly, like you see here on the screen already. It has been defined like this, and this is how you really want to approach trading. Let the trend be very, very clear. Let it not be ambiguous. Let it not be choppy. Let it be clear like this. As a beginner, somebody just approaching how to trade the trending market, you want to spot a trend that is very, very clear. Let it not be choppy. Let it not be sideways. Let it present itself clearly like this. So what you want to do next now, after you've identified your highs and your lows, what you want to do next now is to make sure you mark them out. Okay, make sure you mark them out so that you know where the market is coming into. Now, in a real life situation, okay, in a real life situation, this is what you tend to get. Okay, let's say for example the market just made this first impulsive move. I don't know what is happening. I think it's my network. Okay, I think it's the network. Market just made this first impulsive move. Okay, so next thing you want to expect is a pullback. You understand? So now what we don't know now is where would that pullback end? Okay, clearly we had a straight impulse leg to the upside. Now if this market is pulling back, because you don't want to buy at the high, all right, because if you buy at the high, this market will pull back and you get stopped out. So as a good trader and a sophisticated investor, you want to wait for that pullback to get into your zone. Okay, so this is where we apply tools like trend lines and Fibonacci. All right, this is where we apply tools like trend line and Fibonacci. So let's say your Fibonacci level is around this 50% retracement region. I will do a video specially for Fibonacci, but just for example's sake, let's say it pull back into that 50% region. Okay, so good. This is where we want to be waiting for the trading opportunity. Just same thing like here, but because why I draw this extended trend is for you to see all the highs and lows to confirm it's a bullish market. But in a real sense, if you have something like this, you wait for this pullback. This is the low now. This is the higher high. This is the higher low. This is where you want to be trading from. This is where we want to spot that opportunity. Okay, this is the region we want to buy from, because we've established that this impulsive leg confirms bullish sentiment, which means buyers are really present in the market. So this pullback you are waiting for is just profit taking that is happening from the top. People that bought from this bottom, they're already taking profit at the top, and they're exiting some of their buy position, and the market will start dropping. It doesn't mean that the sentiment has changed. It's just dropping to a level to test a level where buyers will step in again, where buyers will become interested, just like you sitting on the sideline waiting for this pullback. So many other traders, millions and thousands of traders, are waiting for this level also. So you also want to join them to buy when the market has retraced down to this level. All right, so having established that fact, now what you want to do next is, what will be your confirmation once the price gets to this zone? So like we said, hypothetically, or for example's sake, let's say you are waiting for it to get into this zone, and it's already in our box now, in this zone, anticipated zone. All right, so now trading price action, trading trending market, it has to do with confidence. So our number one confidence now will be that the market is in an uptrend. It has pulled back into our region, either the Fib level, Fibonacci level, either 5.0 or the 618 level. It has pulled back into it. Now we have two confidences. Why? One, it has pulled into our zone, is in an uptrend, and we want to look for other confirmation. So the other confirmation that I would like to show you is, we want to see weak rejection. We want to see candlestick patterns around this region. It's as simple as that. You don't have to make it very complex. You want to make it very simple so that it can be repeated. Something you can repeat. You can always come back to the market, see same setup, and just repeat. See same setup, repeat. See same setup, repeat. So that's how trading is done. You don't have to complicate things. All you have to do is see a simple pattern that you can repeat and just optimize. All right, so we'll get into all that later. But first thing you want to understand now from this zone is candlestick rejection. Because we had this impulsive move now to the upside. Now this is the retracement. The retracement will be full of sellers. The retracement is showing us that sellers are stepping into the market and buyers are exiting their position. So you start to see rejections. So we want to see rejection, multiple rejections, wicks. We want to see wicks. I will show you that on the chart. So what I mean by wicks rejection is this. Let me see, how can I draw this now? Okay, I think let me use this tool. So let's say we have something like this. So let's assume this is a candle. Forgive my drawing. We want to see a weak, long one like this to the downside. So we want to see a candle that comes into here, come into this zone. I want to see a weak rejection. We don't want to see it close below this zone. If we see that happening on the 4 hour, is a good sign. We don't want to see any candle closing below that our zone. So that's what I mean by candlestick rejection. Okay, we see weak rejection. They're showing that buyers are interested in that zone, and from there we'll ride it to the upside. From there, once we see a bullish engulfing candle, we enter as our entry confirmation. So I don't want to make this video too long. Same thing with the bearish side. Then I'll take you to the chart and I will show you what I mean. Okay, and show you how it works. Then we'll do how to set the stop loss and the target. So in a bearish market, it's just the opposite. To see a market coming down like this, same thing, okay, just same thing like that. It keeps dropping, typical downtrend like this. Keep dropping. All right, so what you want to do is wait for this pullback, because this is an impulsive move to the downside. This is a lower low, this is a lower high. So we want to be selling from the top. Remember, in the bullish market, we're buying from the higher lows, right? So now we're buying from the lower highs in the bearish market. So we want to sell from this top. All right, same thing that we want to do once we mark that our zone out, okay, like this. let's say we mark it out and we're expecting price to come into this zone. As price approach that zone, what we want to do next is look for confluence. Do we have a fib level there that we want to use? Okay, do we have a fib level? Okay, this one aligns perfectly well with the 768 level. Okay, so once it aligns like that, we have more confluence, and what we're waiting for next is the candlestick rejection. Yeah, waiting for the candlestick rejection, and once it presents itself, we are shorting. No complexity, no any much information, so that you don't have analysis paralysis. When you have too many things you are looking at on the chart, you get confused because your setup will be there and you will miss it. Yeah, I think you rather trade your setup and lose money than miss a very good trading opportunity, or because you're looking for things that obviously are not there. Your mind is just creating a picture of them. So let's go straight to the chart and I'll show you what I mean. Okay, so for example, what do you see here now? So let me take you to the 1 hour chart. Okay, so what do you see here now? So let me do a bullish side. Okay, what do you see here now? This is a very good example. Okay, so we had this move to the upside. This is the pullback, and let's assume we want to buy from this level right here. Okay, we want to buy this pullback. Okay, so obviously we might not see clearly the rejections around here, so I'll go ahead and mark it out. Then we'll go to the 15 minutes and we'll look for that rejection there and more confirmation. I pray my trading view plans taking me back that far. Okay, so I've seen it. So this is what I'm talking about. Sorry, this is the zone. This was where I marked out. Okay, all right, so since we're here now, I can take this out. So what did you see here now? Good rejections. Okay, you can see the candle was unable to close close outside the zone. Okay, which is here, right? Okay, which is here. The candle is unable to close outside of it. So very simple strategy. So now what do? We just take a long position, which is our buy. So this candle will be our entry candle, or nevertheless you want to still use the 1 hour, but whichever time frame is all the same. So I will just go ahead and I'll buy this market here. I'll set my stop loss just below this candle. Okay, and I'll just aim forward now. I'll aim for the next market structure. So what is the next market structure? It's around here. So I'll just aim, since I'm buying from here, I'll just aim here, the next market structure, which is this one. So that will be my target, and you see we hit the take profit there. Okay, easy trade, easy money. So the stop loss goes just below my entry candle. Sometimes I use 30 pips if I'm using the higher time frame. Maybe I'm swinging on the account. I'll just use that 30 pips for my stop. Okay, and I'll target the next market structure, and I'll just place my trade and allow the trade play out. Good risk management. So this is how you trade price action. Okay, so let's do for the bearish side. So let's look for a market that is really falling. We'll go on a 1 hour to identify it first, to make sure that zone will hold. Okay, so for example, I can see this one. Okay, I can see here. So this is it. Okay, so price has come back into this zone. Okay, so I'll mark that out and I'll go on the 15 minutes. Okay, and this is it right here. You can see no candle is closing above that zone. They are rather giving us rejection and a sweet double top. Very sweet double top. Okay, very sweet double top. So what I will do now is to take a sell position and at the close of this candle I would have entered this market, and I'll put my stop loss just above this zone, just slightly, and I'll target this market structure. I won't be greedy. I won't be targeting that key level. I might be targeting it because it's trending downwards, but that's how I'll trade this market. And you can see we hit the take profit right there. So please, this is just, it's very simple. This is how you trade a trending market. Easy peasy, very simple. So this is a simple process that you can come and repeat anytime you like. Anytime you see this setup, you just take your trade, you understand, and you are trading based on the sample size. You are not trading trade by trade base. You are trading on large sample size, and you come out profitable. So guys, that's all for this video. Thank you so much for staying with me. I'll leave the link to my WhatsApp group in the description. Go ahead and join and let's talk. You see the link to my recommended broker. Sign up and for easy deposit and withdrawal. And I'll catch you in the next one. Do take care of yourself. Please like, subscribe, share, comment, and I'll see you in the next one, guys. Thank you.